All right, let's dive in. We're looking at a tale of two hedges today, and something pretty weird is happening. You've got gold and silver, the classic safe havens, climbing back up. But at the exact same time, crypto, the new digital kid on the block, is taking a nosedive. Now, they're both supposed to be a shield against inflation, right? So why in the world are they suddenly going in completely opposite directions?
And that's the real head-scratcher here. For a good while, it seemed like precious metals and crypto were kind of dancing to the same tune, both reacting to all the economic uncertainty out there. But, recently, that connection just snapped. So the big question we're tackling is, what happened? Why the sudden split?
And wow, you can really see that divide right here. I mean, look at this. On one side, precious metals are pulling off this strong, V-shaped recovery after getting knocked down. But then you look over at cryptocurrencies and they seem to be stuck in a slump. So let's break this down and figure out what's driving these two very different stories, starting with the metals.
Okay, first up, the great metal rebound. The market has been on an absolute roller coaster, swinging from a just massive crash to a recovery that's been surprisingly fast. So let's trace the steps. Just look at this timeline. At the beginning of January 2026, things were going parabolic. Silver was up a wild 68%. Then, bam, January 30th hits and the floor just completely falls out. A historic sell-off wiped out all those gains just like that. But then, only a few days later, by February 3rd, a really powerful rebound was already kicking off. I mean, talk about whiplash.
And to really get how big that crash was, on that one day, silver plummeted by over 30%. That was its steepest one-day drop in more than 40 years, going all the way back to 1980. It was a huge shock to the system.
But then, almost right away, we saw this. By February 3rd, silver had already jumped back as much as 13%. This is why you're hearing analysts call it a reset, not a reversal. The thinking is that the fundamental reasons for holding metals are still there. So, what's the secret sauce behind this resilience?
Well, it turns out the surprising hero in this comeback story seems to be silver itself. Specifically, its unique role not just as money, but as a crucial industrial engine.
Now, this is where things get really interesting and where silver charts its own course. See, unlike gold, which is mostly for jewelry and investment bars, a massive 60% of all silver demand comes from industry. It's actually being used to build things. This real-world physical demand creates a solid price floor that you just don't get from investment sentiment alone.
And we're not talking about some old-school factory stuff either. Silver is absolutely essential for the tech that's building our future. We're talking solar panels, electric vehicles, the 5G and 6G networks we rely on, even AI data centers and semiconductors. The list just goes on and on. This actually links silver's future to the tech boom and the green energy revolution, which makes its rebound about way more than just speculation. Okay, so now let's flip the coin and look at the other side of this story, crypto. Because while metals are bouncing back thanks to physical demand, the digital world is wrestling with a completely different issue, what some are calling a full-blown crisis of confidence.
And the selling pressure has just been enormous. The market has seen over $2.5 billion in liquidations recently. So this isn't just a small dip. It's a huge wave of selling that's really shaken investor confidence to its core.
And if you look at the snapshot from early February, the slump was pretty much everywhere. It wasn't just one coin having a bad day. Major players like Bitcoin, Ethereum, and Solana all took some serious hits. And right there, that's the key difference. Unlike silver, crypto has no industrial demand floor to catch it when it falls. Its value is way more exposed to the whims of investor sentiment.
So, we've got these two assets, these two hedges, on completely different paths. But there was one big event that seems to have acted like a catalyst, basically throwing gasoline on the fire and driving them even further apart. And that was something called the Warsh shock.
So on January 30th, Kevin Warsh gets nominated to be the next chair of the Federal Reserve. Now, to understand why the market freaked out, you have to know his whole deal. He is a major critic of policies like quantitative easing, QE, which is basically the central bank printing money to buy assets. He's called it one of the greatest mistakes in modern economic policy. He's not a fan.
So that nomination set off a domino effect. Step 1, Warsh is nominated. Step 2, the market instantly starts pricing in tighter money, less printing. Step 3, that causes the US dollar to rally sharply. And step 4, a stronger dollar puts immense pressure on assets like metals and crypto that don't pay you any interest. It just makes them more expensive for anyone buying with other currencies.
So where does that leave us?
What's the outlook? Well, after everything we've seen, it's pretty clear that these two inflation hedges are now on very different tracks, being pushed and pulled by very different forces.
And really, this slide sums it all up perfectly. On one hand, you have precious metals, whose future is being supported by actual real-world industrial demand and supply shortages. But on the other hand, crypto's future is way more tied to things you can't touch: investor feelings, government regulation, and whether or not big institutions decide to jump in.
It all leaves us with this one big, fascinating question. As we look ahead into a pretty uncertain future, where is real, lasting value actually going to be found? Is it going to be in something that's literally forged in metal, pulled from the earth, or in something written in lines of code? The way things are splitting right now suggests the answer is a whole lot more complicated than we used to think.
And that's our breakdown for today, drawn from the original reporting by Shasta Unfiltered. Thanks for joining us.